Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 5th of September, 2018, and the time getting on to 2:45 p.m. Central Daylight Time. So, my friends, looking at the market, all of the grains continuing to work lower. And, you know, as we get into this time of the year, you normally don't get that much of a bump in the soybeans. We start getting into the sell time of the year where the market goes down and tries to approach what we'll call those harvest lows. No, we're not in harvest yet. It's only the beginning of September. But it's how these things work out. You'll go down, then you come back up, and then you're trying to work yourself ever lower. We're seeing also that in terms of trade, the Canadian representatives are in Washington, D.C. As I see it, they're not going to do anything right away. There's a lot to work through. And from all I'm hearing in the press on trade, it just still appears that there's going to be a time frame between now and October where it has to be done. So I think getting your hopes up real fast for a trade deal with Canada, I wish it would happen, but I don't think it's going to happen real fast. When we look at a weekly area chart of closes, you can see how the beans keep breaking down. And obviously the question is, as we come on this chart, right back to this price, which was 8.14 as a low and 8.14 as a settlement price, by the way, at that time, is the market going to go challenge that? It's about another 11 cents lower. When we look at the soybean chart, you can see you've got sideways action that has developed. The pattern is not a trend. You have a low at 828.5 that was lower than the low here, and a higher high. That is not a trend. The market has downside bias because it is staying under the 18-day average of closes. In terms of Bollinger Bands, you ran them about a week ago to the downside, and you came out to the right-hand side going sideways, but this action is still quite bearish because in the momentum index, which is an oscillator called slow stochastics, the pattern is one of continued bearishness. In other words, the market had gotten oversold. The traditionalists in slow stochastics consider numbers under 20 as being oversold. I twisted that many years ago with the man that created it and said, I've noticed a phenomena that when prices either go sideways under 20 or sideways over 80 for several days, it changes the character of the market and becomes either more bullish if it's overbought or more bearish if it's oversold. It's no longer an oversold or overbought condition. That's what I think is going on right now. Meal is in that camp also. Now, if these markets got a pops, let's say assume that meal gets over 313.80, I'd be concerned because that would probably lift the red line over 20, and in the beans you'd be watching if you got over 851, which is 13 cents higher, what happens with the slow stochastic. Barring that, this market still looks to me like it wants to work lower. In the soybean oil market, you have a pattern of higher lows, higher highs. You ran yesterday right into the top of this upper Bollinger Band, fell back today to what we call the line in the sand, the 18-day average of closes. This sideways action is what some will call a baseline. And I'm going to do a videotape on baseline trading very shortly. So just want to point that out. But sideways action often leads to a breakout of a trend. There is a way to work with that, and I'll be teaching it in that video. In the corn market ran up to the 18-day average of closes, again, that line in the sand, and ran out of its upside momentum. It is still in the process of working out of an oversold condition. Anytime a number is under 30 is my way of looking at it, the market is oversold. Yes, there's an embedded number that can develop, but it doesn't always. So I don't use 20. I use 30 as the oversold number, and until it's out from away from it, the market is oversold. In the wheat market, you still have the pattern of lower highs, certainly the lower lows. The market's got a problem. It is oversold, not embedded, oversold, and that's all I can say. The target, if it keeps dropping, 514. Resistance, now the combination of the 100-day average and the 18-day average of closes. In the sugar market, a lot more strength than I expected to see. The market was able to get over 1078, which is the upper Bollinger Band, and close over it at 1089. If the market were to keep running, and I have my doubts about it given it's overbought, see the difference? Now you got a number over 70. Both numbers aren't going sideways over 80, so it's just overbought. It could run to the 100-day average. On pullbacks, what you don't want to see either tomorrow, Thursday, or Friday is the lows of today taken out. If they were, I'd call this a bull trap and look for an immediate retracement, not a big one, obviously to the 18-day average, but the chart pattern would be destroyed, the bullish one. In the coffee market, momentum is turned up. Prices left today its downtrend. You now have a pattern of a lower low and a higher high. Resistance, projected at least, at the 18-day average of closes. But the market, for the first time in a while, is now stepping away from that lower high, lower low pattern. In the cocoa market, you tried another move up, took out the last rally high, and then finished the day actually lower. The market remains overbought. The bias is up, overbought condition, and no trend. You've got if you look at it, a lower low, and with today's action, a high that's higher than the last high. In the cotton market, battleground, the 18-day average of closes. Is the market trending? Not really, because you got a lower low, and if you look at today's high of 82.99, it took out 82.97. Therefore, you're not getting that pattern of lower highs, lower lows. It's more of a market that's spending its time trading against the 18-day average and bringing in the upper Bollinger Band and bringing to prices the lower one as the market's losing volatility in it at this point. In the cattle market, battleground is the 18-day average of closes. Look at how often you're hitting that number, and you spike up, you spike down, you don't go anywhere. A very, very hard market to trade when that occurs. In the feeder cattle, you reached up for the upper Bollinger Band at the 152.40 level. You got to 152.30, just missed hitting it, and sold off from there quite a bit, about 80 points or so. We'll see what the market can do with that. Support's back at the 18-day average, but again, no trend. Lower low, higher high, caught in a Bollinger Band pattern and an overbought condition. In the hog markets, so far this is a bear market rally. The problem is the oversold condition, which I don't think will attract sellers to it. You have the lower highs, the lower lows. Maybe it gets to the 18-day average or higher, but there's no bargain there in terms of the shorts that look at oversold conditions might say, nah, I'd rather get it to embed and then maybe you'll get me interested. But down there, I don't know. You know, I can't tell you what they'll do exactly, but that's what I'd suspect. You know, we write on all these different categories of information, and we write for commodity traders dealing with the options, dealing with the different derivative parts of it. We talk about hedging a lot. We talk about what the commercials are doing one way or the other, and of course the speculators. And we cover each one in detail. If you're interested in trying our information, this is what our customers get from us. We'd love to put you on the mailing list for a short trial. How do you do it? You either give us a call, or you can go to our website at www.iraepstein.com. You'll see a carousel of free offers. Click on it, or click up here if you're watching me on YouTube. That'll take you right there. With that, I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.